Bitcoin bearish fractal playing out right now. We're seeing a bounce towards the upside at the moment, but the question is, are we in phase A to B or are we already in phase B to C? That's what we're going to be talking about in today's video. So subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like this as well, and let's dive right into the video. So going back to late August, we saw Bitcoin enjoy some grayscale fueled hype, getting us close to this lower high resistance, but then ultimately rejecting in the form of this upside wick to form a lower high relative to this lower high resistance. And that's a key point, because is this actually the lower high, or do we still see a little bit of a higher move beyond that upside wick to form that lower high at around 28,300? So the question is this still phase A to B, where we reject at this lower high, maybe even the 27k region, because that's where we ultimately have the bull market EMAs, the purple 50-week EMA and the green 21-week EMA? Are we going to get a rejection around that region? Because that's approximately 27k, roughly speaking. And even if we were to get an upside deviation beyond these bull market EMAs, well, we've seen that in the previous fractal in 2021. We've seen deviation beyond the EMAs, rejection, and that would probably be an analogous rejection at this lower high resistance here, and then failed support to get us back into 26k. So that's what the fractal assumes, basically speaking. So maybe we are in phase A to B, still trying to search and look for that lower high resistance here. Once again, A to B, lower high resistance, before ultimately getting back to 26k and just showcasing consolidation into the apex of what is really just developing into a descending triangle. So a typically bearish triangular formation where we see compression, price compression into the apex of this descending triangle, showcasing that this support is slowly weakening as a springboard and source of buy-side pressure, and we're seeing strengthening in the seller pressure at this lower high diagonal resistance. That's something that could potentially be happening with this fractal, and an overextension beyond the bull market EMAs could be that final FOMO rally should we manage to even break beyond here, because of course at the same time we could reject at these bull market EMAs just like we did a few weeks ago. So that's also a possibility, because the bull market EMAs, they are around the 27k region. And what's interesting about that is that 27,200, roughly speaking, is this old support which could be turning into new resistance, because we broke down this past August below that level of support, and we might be relief rallying into this level of resistance. And this is something I talk about in a previous video, so feel free to check that one out if you haven't already. But this could be a relief rally, and if we were to look at these upside wicks right over here, upside wicks produced below beyond this key level of resistance a few months back, then could we see some sort of upside wicking beyond 27,200 as well, to as high as that 28,300 region? Those sort of upside wicks into the lower high resistance and rejecting there, that's something this current relief rally could see us get at best. And it doesn't even need to happen. It's not a guarantee that we're going to get a relief rally as high as that. Maybe we reject at 27,200, maybe we upside wick a little bit in the same vein as we saw in the past. But generally speaking, we have to zoom out on the macro sense, because the macro sense is giving us a lot of signals that we might be seeing more bearish fractals form here. And the local top in 2019, which is a pre-halving year, and right over here in 2023, we're also seeing a pre-halving year. What's really compelling about these two fractals is that this is also an M-shaped formation. And as we see here, double top, of course, but we don't actually break below the double top support. We actually rebound into a lower high, right? Before disintegrating and then before relief rallying back into this double top support and then dropping once again. So are we seeing the same thing happen here, where we have a double top scenario forming here, but then we're going to maybe see a relief rally to develop essentially this stage in the process before ultimately losing the analogous double top support and then turning it into a resistance. Could that be the case here, where we relief rally, reject at that lower high, drop below 26k, and then back into that region and turning that old support into a new resistance? And this is essentially what these two fractals represent. But we've also seen this fractal take place in 2021, and of course this was the bull market peaking area, and these are pre-halving years. 2019 and 2023 are pre-halving years, and this is actually the post-halving period. So market cycle wise, very different, but these patterns are still very similar. These fractals represent psychology which recurs regardless of where we are in the market cycle. These patterns are quite agnostic to market cycles because most investors invest emotionally and they never really pay attention to whether Bitcoin is in a bull trend or a bear trend. So these patterns still very much may be valid, especially if we lose the analogous 26k region. Right over here, 30k roughly speaking in 2021 was that analogous region, because that's where we formed this lower high, that relief rally before losing it, turning it into a resistance before dropping lower. And just like in 2019, as we discussed earlier, this relief rally here, drop, turn into resistance before going down towards the downside. And isn't that a compelling argument to see potential relief rally right now into 28k, as high as 28k, could be just 27,200 even, before rejecting, breaking down below 26k, and then revisiting 26k as a new resistance before turning that into a point of rejection and dropping a little bit lower. So what's compelling about these two fractals right over here is that we're seeing them not only mirror each other, 2021 and 2023, but also we're seeing them mirror with 2019 and the local top in the pre-halving year. So the question remains, are we in phase A to B? And if 26k continues to provide support and enables a bounce, then very much on the horizon a relief rally. But generally speaking, this relief rally, whether it's happening now or we forego it altogether and just skip into this B to C move, then C to D move to turn this 26k level into a resistance, generally speaking, it does look like the trend could be down, especially if we reject from this lower high resistance, because this is generally the gateway to an uptrend. If we break beyond this lower high, then we're probably going to continue uptrending. But if this is where we reject once again, then this support could be really weakening with time. And that's something really to consider, because that support lapse in 26k would give about this additional downside continuation as we've seen in 2021 and also 2029. But how do these bearish fractals play into the 4-year cycle? You can learn more about that in the top right hand corner. Check that video out about the 4-year cycle. It's a deep dive. Hope you enjoy that one. Subscribe to the channel, like the video if you enjoy these videos, and I'll speak to you in the next one. Speak to you soon.